Alimentation Couche-Tard is one of Canada's top growth stocks. It's a convenience store giant known for its global brand Circle K. The stock, however, is down around 6% this year. It hasn't been doing that well despite how hot the overall markets have been. The company recently released its latest earnings numbers, and let's go over them to see if it could be a good buy right now. The company reports its earnings in US dollars, and the most recent quarter was for the period ending October 12th. Revenue for that period totaled $17.9 billion, which was an increase of around 3% from the same period last year. Merchandise and service revenue rose by nearly 7%, but revenue from transportation and fuel was only up by around 1%. Its overall net earnings came in at $740.6 million, which was up 4.5% year over year. Overall, it wasn't a bad quarter for Couche-Tard. The company has benefited from an uptick in sales related to meals and alcohol. CEO Alex Miller says meal deals are meeting their needs with choices and options they want at an attractive price point, referring to customers. It's a sign that consumers are opting for cheap meal options at their local convenience stores, perhaps rather than eating out at restaurants. Couche-Tard is a company that's always focused on growth and getting bigger. For nearly a year, it was trying to acquire the parent company of 7-Eleven, a key rival for Couche-Tard. Ultimately, that deal didn't end up happening. And Couche-Tard still plans to grow anyway. It's planning to open 500 new locations by 2028, and it's opening 100 new locations in North America this year. With more than 17,000 locations already all over the world, its convenience stores are highly recognizable and are well known. What does this all mean for investors? Couche-Tard's growth rate isn't terribly exciting, but the company is an intriguing growth investment because of its relentless pursuit of growth and always being on the hunt for new expansion opportunities. At the same time, it is a fairly stable and strong business that benefits from fuel sales. The interesting twist is that it could potentially also benefit from offering cheap meal options for consumers, particularly at a time when people may be looking to cut costs. Between that, Couche-Tard experiencing some better than normal growth, and also expanding into more locations, the business should continue to generate good numbers in the future. This is a company that has been one of the better growth companies over the years on the TSX. Couche-Tard has experienced strong top and bottom line growth over the past decade, and its share price has also surged along the way. Although the stock may seem like a lackluster buy right now, it's trading at a very reasonable 19 times its trailing earnings, which is a decent multiple for a solid growth stock. This is the type of investment you can safely hang on to for years. As for the technicals, you can see that the stock recently made a bullish crossover, with its 50-day moving average crossing above its 200-day moving average, which is a good positive indicator. Plus, the stock has been trading higher recently in light of the solid earnings results. Its RSI has been picking up, but it's not overbought to suggest it may be due for a pullback. In fact, with all the positive news around the business, the stock may be due for a rally. It looks like a good buy to me. A slight bonus with the stock is that you also get a dividend that currently yields 1.1%. It's not massive by any means, but it's a nice plus for hanging on to the stock, as that can help boost your overall returns. So what do you think about Couche-Tard and its recent performance? Do you think it's a good buy, and is it in your portfolio? Let me know what you think in the comments. Thanks for watching, and please be sure to leave a like and subscribe for more videos like this.